Welcome back. You're watching CNBC TV18. It's time now to focus the commodity markets on this auspicious occasion of Diwali. We have seen markets gain up quite strongly. The last 1 year has been quite strong for the equity markets as well. And if you look at the World Bank reports and the various giants who deal with commodities will tell you that the next decade perhaps belongs to commodities with the kind of uncertainties that we have seen coming in the space. We will, of course, dwell on this deeper on this auspicious day today. Joining us on the show is Rishi Nathani of NCDEX. Arun Raste is MD and CEO NCDEX. Kishor Narne is from Motilal Oswal. And we also have Kunal, Shah of Nirmal Bank Commodities, who will join us to tell us on what the next year can be expected on when it comes to commodities. Let's begin this Samvat Commodities special by inviting our guests from the exchanges first. Rishi Nathani is Business and Development Marketing Head at NCDEX, and Mr. Arun Raste, as I said, is MD and CEO at NCDEX. Gentlemen, hi, thank you so much for joining us, and happy festivities to both of you. And we do hope that the next year brings in way more success and happiness and good health, and of course, way more business on the exchanges as well. Mr. Raste, I'll start with you first. And when it comes to agriculture commodities, the year gone by had lots in store, whether it was about the weather and then protectionism theories. And then for the Indian markets, it also was about controlling inflation. There's elections next year as well. And we saw so many various measures come into the market as well. When you look at agriculture as a space, what's your sense on where we stand right now in sense of the exchange?
Thank you, Manisha, and wish you a very happy Diwali and prosperous New Year. There are two or three things as far as agri is concerned. We will continue to see volatility as we saw last year, because given the weather conditions in India, we would have the same kind of weather features which we saw last year. A little bit of drought-related, sort of warnings might affect the crops which are coming in now. So we might continue to see the export bans or activities like that going forward also. Having said that, the market will definitely see volatility. And once you have the volatility, the exchange will have better business. So coming up in agri sector, as well as the new sectors that we are launching in, the new products that we are launching in.
Oh, well, absolutely. And congratulations are on way, because the crude sunflower oil gets launched today. It got launched today at 6:15. Clearly, the market has been waiting for that, Mr. Raste. We've seen so many agriculture commodities actually go out from where you could trade them, hedge them. So congratulations on this one. And can we expect more in the coming 1 year?
For sure. So if I go by the response of the market today, we traded about 1950 metric tons. And for a launch, day 1 hour, we did about 18 odd crores, 286 trades. So there is a pent-up demand for agri-commodities, and agri-commodities markets are looking forward to what we are doing. So hopefully, going by the Mahurat, we obviously need better products, more products. And the exchange will try to fulfill the demand of the market. So going forward, you will see many more new products coming from the exchange.
We wish absolutely for that, because the street clearly has been asking for the commodities which are in a suspension right now to introducing many more commodities as well. And the expectation from the street is that the crude sunflower oil, which has been launched today, perhaps will be a proxy to the edible oil as a sector. And as you said, we'll look at many more coming in. Initial words from you as well, Rishi. Happy festivities to you as well. And if I look at the last 1 year, it clearly has been options that you can absolutely cheer on.
Yeah, so thank you, Manisha. Wishing you and all your viewers a very happy Diwali and a prosperous and wonderful New Year. Well, the market has given us a lot of options, and I think the future is lack of options, pun intended. So yes, that is how the market has been trading, and we hope that going forward, we'll see much more traction in commodities, especially given sticky inflation across the globe. And as you know, commodities are an ideal hedge against inflation.
This is a question I want to ask you both, but Rishi, I'll start with you first. And the other exchanges also seem to be now coming in for commodities as a business. I mean, as I said, commodities is lucrative. It's only expected to grow higher from here. How does it feel to get more exchanges, bigger exchanges, look like a competition from here on?
Yeah, the more the merrier. I mean, point being that if something has potential, then only people want to come in. So that proves that commodities as a market has, found its place in the sun, and people are accepting commodities markets more and more. And as we go ahead, I believe that commodity markets traction will increase much more, and the gap between equity markets and commodity markets will further narrow down.
Rishi, also, I think most part of the last 6 or 8 months, it was about MCX going into a new tech platform. So, as I said, a lot has happened in the last year. MCX moving on onto a new technology, the options as a segment doing quite well. The markets now are waiting for new products to come in. What can we hear this Diwali on that space?
Yeah, so we are planning a lot of products in the pipeline, and just to say that we'll be soon launching the steel rebar contract, as well as SEBI has given permission for options on index in terms of general approval. Now we will work on that and try to get specific approvals for contracts, and there'll be many other contracts also which we are working on. So hopefully going forward, you'll see a lot of contracts in the pipeline now.
Oh, we expect nothing less than that, absolutely, when it comes to commodities. I mean, we've been watching that place for a very long time. Mr. Raste, while there's a lot happening within the space, within the sector as well, when you look at commodity markets in India, and now we are like a couple of decades young or old here, would you say that the markets have matured? Are you looking at better participation? Are you looking at markets now looking at various financial products when it comes to commodities?
So in some sense, it is maturing still. We are just about 20-year-old. If we compare ourselves with, say, Chicago, which is 150-year-old, we are very, very new. But having said that, we are members of CNCDEX, the Commodities Derivative Advisory Committee in the SEBI, and we are looking forward. We are looking forward to new segments of investors coming in. As you are aware, last year, new FPIs were allowed in certain segments. We are hoping that going forward, FPIs will be also allowed in other segments. That is number one. Number two, retail investors' participation has been very, very poor in commodities, and that is something which we and other exchanges are consciously working on. Because once the retail investors comes in, possibly the markets will grow. But what is important is the related infrastructure for commodities is lacking in this country. Say, I can give you just one example. If you're looking at agri-commodities, about 20% of the commodities go waste. So you require better storages, you require better, negotiable warehouse receipts, you require better assaying, better quality, all of that. And that infrastructure building, we have done it for about 20 years, but it will still take about 10, 15 years more. And once that is in place, we will be world-class in those. And then hopefully this market will surpass equities someday. That's our fond hope. And hopefully we should see it in our lifetime.
All right. Rishi, the same question to you as well. How would you look at the next 5 years when it comes to commodities as a market? Are you looking at more products, more participation, more awareness? What is it that you're striving for right now?
So I'm looking at all these factors, Manisha. First of all, more products, more product segments, more participation, whether it's FPIs to retail, everyone, algos, individual hedgers, corporates, everyone. I'm looking, as the market matures, as there is more depth, we will also see a lot of Indian corporates and MSMEs coming and hedging on these platforms. So I see a very bright future for commodity markets. And I always say this line that a 20-year-old would have more potential than maybe a 35-year-old.
Oh, well, absolutely that. I also want to understand on, when it comes to newer products into the market, and since the markets are receptive now, and since we do understand this space as well, there has been this long-standing conversation on perhaps banks should be allowed as well. So when I look at this Diwali and until next Diwali, can we look at those big bag changes also come in, Mr. Raste?
Well, I can't, do future guessing in policy of the government, but we can hope that this might happen. And if that happens, that will be good for the markets, that will be good for the banks, and that will be good for the investors also. So that is a fond wish. At the end of the day, it is the policymakers who have to decide it.
What about credit carbons and weather? And we've been talking about that. Can we expect that in the next year?
Hopefully, yes.
All right. So that is what we are anticipating from the exchanges this time around. Mr. Raste, Rishi, thank you so much for joining us. Thank you for joining us on Diwali today and sharing it with us on what has worked out in the last year and what can be expected in the next 1 year as well, as far as commodities and exchanges do. But we'll continue our conversation after this very short commercial break with Kishor Narne of Motilal Oswal Commodities and Kunal Shah of Nirmal Bang. And we'll tell you on how to trade commodities for the next 1 year, what is important to watch out for, all of those details coming up in a bit.
Passive as a strategy is very big worldwide, right? And in India, it's still gaining momentum. People are still trying to adjust to index funds and kind of just learning about them. I wanted to ask, what would be a good strategy? Would it be passives, only actives, or a mix of passive and active both in your portfolio?
Okay, I'll ask the panel. Interesting question for sure. And I think we got these queries during the course of the year as well, because a lot of fund houses have started now launching mutual funds which mirror the index itself, the mid-cap index or the small-cap index. So basically passives on even mid and small caps. Naren, what's your take on this trend and what would your advice be?
If you look today at anything other than mid-cap, you'll find that actually huge alpha has been created over the last 1 year, 3 years, even 5 years at this point of time. In mid-cap, it's quite a different experience. Mid-cap funds have done very badly against benchmarks. So passive has done very well. So you go through these phases. If you had looked at 2018 end or 2019, passive had beaten active very, very much in most of the large cap funds. So you go through these cycles, but at the same time, on a continuing basis, I think we have a tortoise in the form of passive. And
Welcome back, and we'll take a look on how the commodities have performed in the last 1 year. If you look at gold and silver, that clearly was the best asset class with 20 to 22% of gains for gold and silver, both these commodities. What didn't do so well in the last 1 year or 12 months has been the crude oil prices, that is trading in the negative. And within the metal space, it has been steel and zinc which underperform. Otherwise, copper, lead, aluminum did quite well. Within the agri space, it was an all-time high for the cumin prices, and we saw turmeric as well jump up by 86% in the last 1 year. We'll talk about all of these commodities. Joining us now is Kishor Narne from Motilal Oswal and Kunal Shah is from Nirmal Bang. Gentlemen, hi, happy festivities to you, and thank you so much for joining us here live at CNBC TV18. Kishor, gold and silver clearly have been the best performers. If you look at what the equity markets in India or global have done, we've seen a double-digit gain for precious metal prices. But then we've also seen a lot of uncertainties, whether it was about geopolitics or financial markets for that sense. How is this Diwali looking? Where do you see the prices to the next Diwali?
Yeah, good evening, Manisha, and a very happy and prosperous Diwali to you as well as all the viewers. Yes, absolutely right. You have said that gold, silver have been one of the best performing asset classes across the asset classes actually, and 20-21% is not a small return for gold and silver. And we have to remember that this kind of returns have been delivered in the background where the interest rates were rising, and in some of the countries, these interest rates have peaked out to a multi-decade high. With that backdrop, if gold can deliver that kind of returns, imagine what happens when the interest rates slide and go down from here. One thing is for sure, in the next 12 months or so, probably what our view is that interest rates might be a little more sticky and they might not go down, but they will continue here. So in that background, probably the returns might be slower. So in the next 12 months, we look at gold at around 10 to 12% upside in Indian market around 63,000 to 65,000 probably. Given that rupee dollar will exchange rate would remain more or less in this kind of range, rather than we don't see a significant depreciation in rupee. So with hedging on that, we see that. And silver, we are extremely bullish on silver. We continue to be bullish on that. We look at another 15 to 20% upside in silver in the next 12 months or so. Probably it will take it to 85, even close to 90,000 in rupee terms.
All right, so higher gains coming in for the next year as well. Kunal, any pick between gold and silver? Where is your conviction now?
Well, my conviction remains with both the commodities. Silver, the first I'll talk about silver. So silver deficit is expected to widen from 225 million ounce to this year 285 million ounce, which is very bullish. Second, this is the second consecutive year where we are seeing such a big deficit. So in a market of 1300 million ounce, a deficit of 270, 280 million ounce from last 2 years is a clear bull run. So when this kind of shortages takes place in any commodities, the prices can really go up quite sharply. So right now the narrative is higher for longer, and the higher bond yields and the higher dollar index, and that is what basically stopping the ETF investors to invest in gold or silver. And other thing is that assuming that the interest rate will stay high for quite a long period of time, because of that, gold and silver is not able to break out. But the fact remains is that this interest rate cannot go up from here in US, in Europe, in any countries. So as per us, the interest rates have already peaked out. And the moment you see a couple of bad months in terms of economic data from US, Europe, suddenly the entire narrative will start change. So we will see a drastic cut in interest rate, because if you see what happened even in this week, US 30-year bond auction, there were no buyers. So if the yields keep shooting up, how they are going to service their debt? And that remains the key scenario going forward for gold and silver. So we are expecting another spectacular year as far as 2024 is concerned. Silver is expected to test $28 to $30 on COMEX. In India, conservatively, it should trade at around 84,000, 85,000 rupees. These are my conservative targets. So quite bullish on silver. Coming to the second one, gold looks very bullish to me. It is the must own, because the central banks are continuously buying gold and selling their US treasury holdings. Gold is must, and it is a strategic investment right now, irrespective of what happens going forward, whether the interest rates stay higher for longer or whether we see cut in interest rate. Gold is about to take off in a very big way. So I'm expecting this $1,800, $1,850. These kind of levels we are not going to see in next 2-3 years. We are going much higher. That has been our base case scenario. $2,300 to $2,400 on COMEX is something what I'm expecting going forward. And interest rate cut maybe perhaps in US will start by March or April 2024. Even before that it can take place, because the turbulence in the US bond market is clear. And rate hike is no longer any base case. No matter what a Federal Reserve official says, or no matter which central bank says, rate hike is out of question. So gold is definitely going up. And if something goes wrong geopolitically, you still have a hedge. You see what happened with Bitcoin from 20,000 to 37,000 suddenly. So this is a clear reflection that the monetary policy going forward is not going to be tighter. And that's been a narrative for 2024. So be bold. And in India, gold can test 68,000 to 69,000 rupees. That is our view for
I can almost hear that caption: be bold, buy gold. I mean, with the kind of gains we've seen in last 1 year, you are still advocating still more buying happening here, because the next 1 year the uncertainties just grow higher there. All right, that's about gold and silver. Definitely a buy there. But Kishor, how about the energy markets? Because this didn't do well, and we've seen a very big range onto this one: a $70 on the lower side, almost 100 on the higher side. What is the range that you would want to suggest now for until next Diwali?
See, Manisha, it's now very evident in the market that it's an oversupplied market. It's the demand is not as much as the supply is. Despite all the production cuts by Russia as well as the Saudi and OPEC, the entire OPEC plus, they have managed to keep the prices under 85 for Brent, and probably around 80 on WTI. Actually, if you give a small positive news, the moment it comes for dollar of the crude slides back to 75. So without these geopolitical tensions, actually crude will not even sustain at these levels. So that's actually showing the fundamental scenario of the market, so on the demand supply. So, but we are not very bearish at this point of time. Probably around 65 should be a downside floor. So anything close to $65 to 70 in between is a level to buy crude. But on the upside, again, we're not significantly bullish on that. Also, probably around 87 to 90 is a probable upside range for the next 12 months. I'm not saying we are bullish, but actually this is the upside range where the ceiling lies. So 65 being the floor and 90 being the ceiling, somewhere in between the market will oscillate. So average price should be around 82, 83 for WTI.
Got that. Let's take a look at the metal prices now. And while metals within equities have done quite well, it has been quite a mixed year for the underlying year. While zinc and steel definitely underperform, we've seen the others do slightly better than that. But for the next year now, from here, for the next couple of quarters, Kunal, how would you look at this sector?
About the outlook of metals going forward. Metals have been laggard for the rest of this year. Last year, and going forward during next year, we expect not extraordinary returns like 30-40%, not that kind of return, but metals are poised to take a big leap going forward. Three reasons. One, the economic data from China continues to remain grim, and the general consensus continues to remain bad because of the Chinese real estate sector continues to struggle. So that is basically in the price. That is the reason why zinc prices are down by 30-40%. That is the reason why copper prices are down by 20-25%. So going forward, what can change? Going forward, if the monetary policy of US or if the China you see coming up with big stimulus, or US decides to cut the interest rate, all these kind of scenario are not priced in. Three, on the production side, we are going to see, because of the winter in China, production of a lot of metals like aluminum, zinc, copper is going to decline because of the environmental restrictions, which we generally see from December to January, February, extending sometimes till March also. And most important reason, we are expecting financial condition in next 3 months from tighter to relatively relaxed or easy monetary policy kind of scenario. Because this interest rates at this level, even though it has not damaged US economy significantly, but are not sustainable looking at what is happening in the US bond market. And because if the bond yield shoots up from here, it deceives the purpose of Federal Reserve. Because we've seen with 100 pips of rise in US 2-year, 5-year, 10-year, 30-year bond yields, the debt servicing cost have increased by more than $500 billion. So in last 6 months, they've reduced $600 billion of treasuries and sold them in the market. But in a matter of just 1 month, all this interest payment have surged. So this is not sustainable. So maybe, from February, March, market will start pricing in rate cuts in US. And that will lead to upside in metal. So financial condition getting relaxed remains the prime reason for me to believe that the downside is very limited from here. And this is the right time. Next 2 months, you should position yourself for the upside in all of these base metals which are trading on MCX.
Okay, so it's an absolute buy coming in across sectors. I have a last 1 minute, but I do want to come to each one of you with your top pick or a top sector that you see performing the best in next 1 year. Kishor, you go first.
See, Manisha, I think we are still keeping one rate hike on the table, and probably the rate cuts are not been going for the third quarter, fourth quarter 24. So I think gold, silver is the primary base case. Silver is the topmost commodity. That's the top of the table. Second will be gold. And probably base metals maybe aluminum is a little bit bullish on that, and copper could be. That's it.
All right. So silver, gold and aluminum and copper in that ranking is how we see this. Kunal, how would you portray them? And you, of course, have a choice of putting in an agro commodity as well, because we've seen very strong gains onto this one last year.
So first, my favorite pick will be absolutely in line with Kishore. My pick also remains silver, gold. These are the two picks. I'm having highest conviction in them. Third would be absolutely like something like copper. And even oil, $65, $68. Oil, I'd just like to add a major point. The US oil production is going to decline going forward in the year 2024. And the contract which is traded on MCX is WTI crude oil. So top basins, which accounts for the major production of shale oil, like Permian Basin, they are going to see a drop in oil production. These basins are exhausted, and that can lead to a spike in oil. So I'm expecting even oil to perform well. 70, 72 is a good range to buy. 90, 95 is the kind of upside you can expect going forward in 2024. And
I want
definitely copper.
I get that. I just want one final question from you. Kishor, how long have you been following commodities?
It's 22 years now.
Okay, and Kunal?
Yeah, well, mine is 3 years. I'm 3 years younger than Kishor. I'm 19 years.
All right.
Commodities from 19 years.
All right, almost a couple of decades now, and gold and silver are our top convictions. Thank you, gentlemen, so much for joining us today, and very, very happy festivities to both of you. And with that, it's a wrap on this Mahurat Commodities special. Thank you so much for watching, and wish you a very happy Diwali to all of our viewers from all of us here at CNBC-TV18.